Good morning, everyone, and welcome to my video analysis for the precious metals market. Today is February 27th, 2015. My name is JR, and I'll be doing an analysis today on monthly, weekly, and daily charts here for both gold and silver. And of course, we'll also do the Dow Jones. This is your monthly chart here for gold. Still respecting this trend line. Huge bullish engulfing candle here. Again, anytime you do an engulfing candle, you want to get in here roughly at the half point of the candle, especially if you find it at the bottom of a, downtrend. These bullish candles usually can indicate higher prices coming soon. This is the last day of the month, so again, anytime you get in these candles, you want to get in halfway. If you can get at the bottom of the candle, that's also extremely positive. Again, you'd be risking about, on a trade like this, prices are at 12.17. You're probably risking $100 to make probably about 150. Okay, that's your monthly chart here. Still have to go above this 20-day moving average, so it could be the case that you have this bullish engulfing candle, and then next month we see a nice move to the $1,300 level. Okay, still holding resistance here on this 20-day moving average. Stochastics are still pointing higher, so further room to go up. This is your weekly chart. Just broke this trend line here this week. We found some sort of support here in this zone. I also talked about this zone on my last video. This could be the zone where, again, I've said this time and time again, you have the 20-day moving average coming down, you have it flatten out, and then you want to start going up. If we surpass this level here, the $1,300 level, I think there's a phenomenal chance that the bear market is over, and we are going to have a bull market for the next several years. So again, key level here, 1309. If this trend line is accurate, then what you're going to see is you're going to find some support in this trend line. We are currently finding some support, plus that zone, plus this long-term trend line that we have down here. This could be the case where this market goes from here, maybe up here, come back down, and then just continue to take off. Or we can probably just do this, come back down and take off. But again, if we do break this level here, the 1310, we can see this market make a big move and test the 1400 or maybe even the mid 1400s. We'll see how that plays out. But again, lots of support here in this level. I would really be surprised if we fall below this level here, the 1167. These, as of right now, this is your low, this is your next low, this is your next low, this is your high, and this is your high. So you have a series of higher lows and a series of higher highs. That is the definition of a bull market. On the weekly chart, this is bull simply because we've broken more than 2 levels of resistance. We broke this level here, and we also broke this level here, and we also broke through this zone. You can see that we surpassed the zone. We never closed above the zone. That would have been even more positive, but we didn't do that. As of now, this level seems to be holding very well. The 20-day moving average is flat, and now what we want to do is we want this 20-day moving average to start curving to the upside. If we start curving to the upside, this could be really big. I might want to add also that yesterday someone bought 20,000 contracts of gold. That's roughly 2 million ounces of gold. So obviously somebody is trading this formation here. Okay, that's your weekly chart. Your daily chart, a bit bearish. Okay, we've fallen below this level of support and this level of support as well. That once you take out 2 levels of support, you are now bearish. This is a series of lower highs as well, lower highs, and now we're in the process of breaking this trend. You have a low here, another low here, another low here, and another low. So again, definition of a bear trend, that's your daily chart. So your daily chart was positive until it fell below this level here. Briefly, even though it did it briefly, and it did it also on the day that Yellen was speaking, which was Monday and Tuesday, right? Let me delete all this. All right, so that might just be an emotional move because Yellen's speaking. And also I do want to point out that we have finally broke this downtrend line here, right? So what we want to do is we want to see how this market reacts. Also, we have this 20-day moving average coming down. Again, we would need this to flatten out and start moving up. So in order for that to happen, you would have to see a move up to at least 1250, come back down, and continue to go higher. That's what I would expect. Let's see what happens. That's your daily chart here for gold. Let's look at silver. Silver doing something very similar to gold. This is your monthly chart here on silver. I'll take this line out of here. Okay. This is your long-term trend. Never tested the level here, but we did test this level of support all the way down to the bottom. So we could find silver come up to the high 18s, possibly come over here. But for silver, silver does have a little bit more to go. Stochastics is pointing higher, so still further room to gain. That's on your monthly chart. As of right now, we still have this 20-day moving average as well. That's going to hold as resistance as well. Okay, here's your move above the 20-day moving average. Here we are currently seeing now this, unlike gold, which just broke this trend line here slightly, silver did really break that trend line pretty hard. That's the uptrend that we were establishing, right? So you have a low here, another low here. So higher lows, higher highs. Now we're looking for another higher high, right? Currently above this 20-day moving average, coming back down, testing the 20-day moving average. This is what we could see. Phenomenal risk to reward. I actually had an order here ready to pick me up, but unfortunately it missed me by 10 cents. My order was at $16, 16 even, and the low was 16.10. Hey, that's what happens. No big deal. We'll catch the next one. And as of now, we have to surpass this level here. Big level of resistance here for silver. Okay, really nice level of resistance. So again, I want to see this market do something like this, go above this 20-day moving average. You heard me before, and come back up, right? So right now we have this 20-day moving average to overcome, and we also have this trend line that's really been holding since January 30 to the 23rd, since the 23rd of January, right? So this is a nice zone. Let's see how high we can go. And that's your gold and that's your silver chart. All right, let's look at the Dow Jones. The Dow Jones broke through this level here. I really expected a big move to the upside. Anytime you break an all-time high, what you want to see is you want to see a move like this, because usually the moves are calculated based on how long you've been trending. So we were trending sideways for quite some time, really since December all the way till February. So you have almost 3 months of sideways trading, and then when we break out, this is what the market does. It goes from here to here. That's a very, very, very small move that does not show a lot of confidence in these buyers. And I would proceed with caution here, though you do have a nice trend moving up. So it could be that this market from here, from 18,195, can make the move. Who knows? I would be a short-term buyer here, roughly at this level here, between 18 and 18,138, and seeing if I can take this thing to at least 18.4. We'll see what happens though. But 20-day moving average also moving up. But again, I'm very surprised that you had such a wide range, such a big range, and then such a small breakout. Usually these breakouts tend to equal the size of the price action that you had previously, right? That's your daily chart on the Dow. This is your weekly chart. What a phenomenal chart this has been. The one thing that I do want to show here, this is a monthly chart here. I wanted to compare charts, and I will tell you that my gold charts looks much prettier than this. You have a high, you have a low, you have a higher high, you have a lower low. This is called the Broadening Formation. I'd like to show this also briefly. I want to see what's going on in the other markets here. I want you guys to see for yourselves. What I want to do is I want to highlight what's going on across the globe. These are all the indices. What I'm going to do is I'm going to go through the indices that I believe off the top of my head that I know that are easing, right? Like the US and India and Japan. Every country is easing, right? Either via quantitative easing or through higher interest rates. So I want to compare some of these indices, right? Let's look at the Australian indice, right? Look at that. This is our monthly chart here. Okay, back in 2009, this thing was at 31. This thing has more than doubled, almost doubled, right? Australia's been easing. Let's look at the next one, Canada. Right? Not a lot of information on Canada, not a lot of data at all. Okay? But we do know that back in 2013, this thing was at 679. Right now is at 800. So again, I'm only seeing, I don't know why there's no data here on the Canadian market. Let's try this other one here. Also not showing any data. But again, we can see here that because of quantitative easing, they're at 11,000 right now, up almost 20%, over 20% here in the last year, right? This is back in 2013. So the last year and a half, roughly, this thing is up more than 20%, almost 30%. Let's look at China, the China market here. Look at this, right? Back in 2000 and this is in less than a year, this thing is up from 2011, the low was 1990. Right now is at 33. This thing has more than doubled. This thing has almost tripled in value. Unbelievable, right? And we all know that China is easing. Let's look at France. Of course, they've been easing, high unemployment. And look what we have. In 2009, this thing was at 37. This thing is at 11. This thing has more than tripled in value. Let's look at the Germany, the DAX, right? Look at this. Back in 2009, this thing was at 35. This thing is now at 11,000. Almost, geez, my goodness. This thing is almost tripled, almost quadrupled in value. Let's look at India. India's been doing a lot of easing. Back in 2009, this thing was at 2,100. This thing is now at 8,000. Unbelievable. This thing has quadrupled. And these are countries that are having extreme amounts of hardships in their economies. And look how these markets are just moving. This is the Japan, the Nikkei, right? 7,000. This thing is now at 18,000. Has more than doubled in value. Let's look at Spain, right? Spain, with its two-digit unemployment. Look at this. Back in 2009, the low was 67. This thing is now at 11,000. Though it hasn't hit all-time highs like it did back in 2008, 2007, it is trading at a high, up almost doubled since the middle of 2013. And this is a country that unemployment is through the roof. Let's look at Sweden. Okay, Sweden. Look at this. Jeez, back in 2009, this thing was at 500 bucks. This thing is at 1,600. Has more than tripled in value. And we just know what happened here recently, where they unpegged the Swiss franc. They unpegged it from the euro, and to counteract, what they did was they put interest rates in negative territory. Let's look at Turkey. Look at this. Also, back in 2012, this thing was at 49. This thing is at 84. Back in 2009, this thing was at 21. This thing has quadrupled. Turkey, quadrupled in the last 6 years. The United Kingdom. Look at this. The UK again setting all-time highs. Back in 2009, this thing was at 34. This thing is now at 69. Has doubled in value. The Dow Jones, okay. The Dow Jones 6,400 was the low. This thing is at 18,000. This thing has tripled in value. Unbelievable, unreal, unreal. Every country around the world is easing. If they're not easing because they're printing money, the Eurozone next week starts to print 60 billion euros until September of 2016. These guys have no clue of what they're doing. You want to put yourself in a position where 10, 15, 20% of investment in portfolio should be in the precious metals market, and protect yourself against these chaotic moves. This is crazy. These markets are just moving parabolic, and there's absolutely nothing to justify. Unemployment is still really high. The market is still very shaky. So again, you have to protect yourself against what can happen. I hope you guys enjoyed the video. I'll see you guys next week. Bye-bye.